feel your heart is breaking, take my hand, no hesitating. When you're just so tired of trying, all alone you feel like hiding. Together we'll keep fighting. There's no stopping us. Hold on, we're gonna make it. We're gonna make it. Don't stop now. Hold on, we're gonna make it. We're gonna mountains too high we can climb it. Fearless, we're taking the moment. There's no stopping us. Hold on, we're gonna make it. We're gonna make it. Can you see the sun is shining like a new hope? Feel it rising, coming over the horizon. There's no stopping us. Hold on, we're gonna make it. We're gonna make it. Don't stop now. Hold on, we're gonna make it. We're gonna mountains too high we can climb it. Fearless, we're taking the moment. There's no stopping us. Hold on, we're gonna make it. We're gonna make it. Don't you give up, don't you give up on me. Don't you give up, don't you give up now. Don't you give up, don't you give up on me. Don't you give up, don't you give up now. Don't you give up, don't you give up on me. Don't you give up, don't you give up now. Don't you give up, don't you give up on me. Don't you give up, don't you give up now. There's no stopping.
Good evening. Well, actually, this is later on in the afternoon. We're pre-recording this one. It's a beautiful day out today. It's May 22nd. And slowly everything is coming back to life. My son and I went out to get something to eat in downtown Hampton. And people are enjoying themselves, walking along. Each restaurant has a band in there. So it's nice to see everything getting back to normal. We're still not out of the woods yet, so make sure if you haven't. My son actually got his second shot today. He's 25. So if you haven't gotten your shot, I recommend that you do. Okay, we're almost at the end. Let's keep it going strong. Not say, all right, things look a lot better. We have to keep on going straight in this direction of getting those shots. So I hope you do. And we're gonna have a good show today because, and I always have a good show, by the way. But when a person looks for a home, the first thing they need to do, and that's after they find a good realtor like myself, is you have to get pre-qualified. And it's so important. I just had a client yesterday who was looking at homes that we found out that day that was really out of her price range. And she's a little upset now, and she says, all right, I have to make some changes of what I want. But even for that fact, so you don't get disappointed, if you find out now how much you're pre-qualified for and you start looking, you won't have that event when you see something you really like, you go, all right, now I'm going to get pre-qualified, and you find out it's out of your price range. And it could be various reasons it's out of your price range, not so much because of the cost of the home, but it may be in an HOA, and there's a monthly fee for the HOA. It may be in a flood zone, and you have to add an extra $100 or $120 on your mortgage payment a month. So these are issues that might knock you out. You might have been approved for a house that's $200,000, but when these other issues arise, it knocks you out. So this is going to be a good one. And let me do my little introduction video, and then we'll bring in Rachel Kane of Tidewater Mortgage. All right, so let me bring in now Rachel Kane. She's a mortgage loan officer for Tidewater Mortgage. Hi, Rachel.
Hi, good afternoon.
Can you hear me good?
I can hear you very well. Can you hear me okay?
Yes, it's nice and clear. It's really good.
Glad to be here.
Are you enjoying your weekend?
Yeah. It's gorgeous outside. So
it is. It's nice.
I'm enjoying it. Yeah, it's beautiful.
And we have a nice stretch of weather this week, and hopefully Memorial Weekend, when the pools and the beaches officially open up, it's going to be really nice. I mean, what I kind of like this week is going to be warm. It'll heat up the pool, and this way when I jump in it next Saturday, it'll be nice and warm. So that's
Right?
what I'm hoping. Yeah.
I love it. I'm going on all of the bike rides that I can. All of them.
I'm actually, maybe I have to join up with you. When I was living in Brooklyn, New York, I was a big bike riding fan. In fact, back in Brooklyn, New York, I was a high school teacher. And in the afternoon, I would do real estate at a local office. But the first school I taught at, it was about 20 minutes away. I would bike every day. I would bike in the cold. Even if there was a little snow, I would go. If there was a lot of snow, then I couldn't go. But I was an avid bike rider. And I would do and it's not a race. It's I would do the 5-borough bike tour. And
I've done that.
you done that? Yeah. And I think it's 45 miles, and you start off, in the Wall Street area, and you go up and you go through the 5 boroughs. It's fantastic. And you go at your pace, it's not a race. Some people do it and they get it done in like an hour and a half. I need a good portion of the day. And then it ends up in Staten Island, So last year was canceled. It's always the Sunday before Mother's Day, and I looked to see if they were doing it. And they did not cancel it, but they're postponing it. They're seeing how, because New York is opening up right now. So if they get the okay, that they could have maybe they'll do it, in September or so, but they're still planning to have it. So I'm looking forward to that. Here, now living in Virginia, I don't even walk to my mailbox. I've gotten so lazy. And of course, in New York, you walk everywhere. And then when you take the subways, I had to go a couple of years ago into New York to do. I was the administrator of my aunt's will, and I had to go to a bank. And I flew in, and then I took a shuttle to the train, and then I walked all around Times Square to Rockefeller Center because it was right before the beginning of the holidays, and the tree was up, it wasn't lit. And then I went, had to go into Queens, but all the walking I did, and just going up and down the subway steps, you go to a gym now and you pay, to go on those stairs, but when you're in New York, If you're traveling by train, you're doing that all the time, you know. So I got to get back into my bike riding. I really do. So I'll have to find out what rides.
When you're ready, let me know.
Right. All right. So tell us a little bit about yourself. What you're doing right now at Tidewater, and a little bit of your background.
Yeah. So my name is Rachel Kane, the mortgagenta. And I work for Tidewater Mortgage. I've been there for about a year. I'm in my first year, and I'm really enjoying it. I love the housing industry. It's just such a special industry to be a part of, and to be able to help people get pre-qualified and get into their dream homes is really amazing. I have a customer service background. So for years, I worked for a company called REI, and that's all about customer service. So when I was looking for a change, I definitely thought about what I was passionate about, and it's the housing market and customer service, because I love giving good customer service and I love helping people to the best of my ability. So I transitioned, and I haven't looked back since, and I've been really enjoying it so far.
That's great, and it's very rewarding when we're both working in concert, you know, to get buyers new homes, and once they get into that new home, especially for first-time home buyers, it's a wonderful experience. They're so happy. It's a long. Is my video audio still good? You hear me?
Yeah.
Okay. All right. But it's very rewarding when they get in and they go into their first home. But it's a lot of work. All right, to do it. I'm going to put up the things we're going to talk about. I just want to start first. You know, I always have, you know, I have leads coming in, and we begin talking and what, you know, and what type of house. The biggest hurdle I have to do with them is to get them to speak to a mortgage loan officer. And I can't, you know, I've done these podcasts now for like over a year, and I bring it up almost every episode on the importance of getting that pre-qualification right now. Now, and especially in today's market, because if you see a house that you like, I have to submit that contract with the pre-qual letter. It can't wait another 2 days. In another 2 days, that property will be gone. So it's important, but in today's market, it's even more important to get that pre-qualification letter right now. And it's good to get it now. I mean, you could expound on this, because you might have a couple of bumps in the road you have to work out. So let's talk. I mean, how do you feel about that? About the importance of getting pre-qualified right off the bat? It's very.
Yeah, to me and everybody, really, it's the number one priority, right? Because like you already said, if you're not pre-qualified, you can't put an offer on the house. So all the time and energy that you and any borrowers are spending looking for houses, you know, it may not go through, or there may be some things they should know before they're looking for a house. And also, like you said, in this market, it's important that you be able to put an offer in that day, because houses are just flying. So you want to really put yourself in the best position as a buyer. And the best way to do that is to get pre-qualified beforehand. Okay. And there are times when it does take a little bit longer to get pre-qualified, like a couple days. There's paperwork we ask for and everything like that. So my recommendation is always go to a lender as soon as possible. And one thing that I've noticed that I think really freaks borrowers out in talking to lenders is they don't really realize what we do. And they don't realize that they don't have to pay us unless they go with us. And I think that that's a huge hurdle for a lot of people, because they're scared that once they talk to somebody, they're locked into something. Right. And that's actually not the case. So even if you're just talking to a lender to ask them questions, like, you don't owe us anything as a borrower.
Right. So. I tell my buyers that the pre-qualification is free. You know, don't think you got to pay out $50, $75 for that right off the bat.
Yeah.
I also feel that, you know, a lot of people, they may have an idea of how the credit is, and it's all right. I'm going to pay down some lines of credit first, but the mortgage loan officer might say, well, you need to pay this one down first, and if you could throw some extra money in there, that'll bring your score up a little bit more than just like haphazardly paying off some lines of credit. Would you say that's correct?
That is 100% correct.
Yeah.
We actually have a really cool program we use at Tidewater Mortgage, and
Yeah.
we can do like a projected payoff. So if you're trying to raise a credit score, or maybe paid out some debt to increase your credit score to where you need it to be, we can actually go in and look and say, okay, you need to pay this credit card down this much, but don't close the account, or you need to close this account. So there are so many different things that you can do.
Yeah.
And that we can give you really solid advice on how to do it in a way that's not going to affect you negatively for the pre-qualification.
And again, there's no cost for that advice that you give them over the phone. No.
Exactly.
So, the people listening out there, please, that's so important, all right? Because if you don't get past this task of getting pre-qualified, you could look at all the beautiful homes you want, but it's not going to get done. And when I tell some people too, like even if they can't be pre-qualified at this moment, and you say, well, we need about another 2 or 3 months to pay down some debt, at least you have a plan, right? At least you have something to work towards and then have the ability to buy that house. And it might take 6 months, it might take a year, but again, you're on a path to home ownership by having that information up front.
Right. And another thing I often run into is people are scared to check their credit.
Yeah, they are. Yeah.
Especially if they're kind of on the cusp, they don't want it to hurt their credit.
Yeah.
And my advice is always, one, you won't know until you try.
Right.
And two, if you run your credit a couple of times within a specific amount of time, usually like 30 to 45 days, the credit bureaus recognize that you were trying to get a loan for something, and it doesn't, those hits don't count against you in the same way. And it doesn't actually affect your credit as much as most people think. It's what we call, it's a hard credit hit, but it's a low impact on your score. So it's never going to drop it 20 points. You're looking at a couple points maximum. So that's not something to worry about as much as people think it is.
Yeah. And what I heard, and I've heard different variations on it, you could say what's right or wrong, that the credit bureaus see looking for a mortgage, like if you're going to your company, you're going to Bank of America, and you're trying to get the best rate, they see mortgage as good credit, not like if you're sending out, trying to get a Master credit card or Visa credit card. I heard that doing that is a little bit, it's not as harmful.
Yeah, it's not, like I said, it's a low impact. And like I said, also, they are, I'm so sorry if you hear my dog.
Don't worry about it. Don't worry. Everybody knows we're home.
She would not, but she's loud. But they don't, it's like I said, it's still going to impact your score, but it's not going to be that much.
Right.
So it's not going to raise it because they're not going to know you're looking for a house necessarily, but they are going to recognize that you're looking for something.
Right.
And they're not going to ping you. It's not like you're going out and trying to open 12 new credit cards or 3 new credit cards. You're trying to buy a house and you're trying to do it in the best way for you. And they understand that.
All right. So let's go to our first big topic, because this is, I happen to work with a lot of new home buyers. They come to me, and maybe I'm kind of patient. I know they have a lot of questions, and then I'm working with 2 people right now that are actually working towards the VHDA program. They had to pay down some debt. One of my new buyers, he got his tax refund, and then he got the stimulus check, and his credit wasn't really pinged by credit cards, but he had some medical bills he had to pay off. So he paid them off. It raised his score to the point that he could be qualified, and he's going about it right now. So I get a lot of people and who are looking, they're first-time home buyers, and they ask what programs are out there. So let's start talking about programs for first-time home buyers. What do you have out there?
Yeah, so the biggest ones and the most common ones is Virginia Housing. It used to be VHDA. Now they just go by Virginia Housing.
Okay. Okay.
And there's two main programs that they use. And the first one I want to talk about is probably the most common one that people go with.
Mm-hmm.
And it is the down payment and closing cost assistance program.
Mm-hmm.
So if you have below a 680 credit score, you can use the down payment assistance program. So basically, whether you go conventional or VHDA, which we can get into a little bit later, conventional or FHA, we can get into that a little bit later. There's different down payment qualifications, but what you can do is roll that down payment into what's called a second, and we pair that second loan with your first mortgage. So you pay it off a little bit at a time. So you don't have to necessarily bring like $7,000 to the closing table like you would.
Right.
So if you can do that if it's below 680. If your credit score is above 680, then you can actually also pair that with closing cost assistance.
Okay.
Which you would add 1.5% to the loan for that. So if you're going conventional, it's 3% down, and then you add 1.5% to that. And if you go FHA, it's 3.5% down, and then you would add 1.5% to that. So you would bring almost nothing to closing in that case, and then you just pay it off as you go.
Okay.
That's a great program. I would say that probably like 95% of borrowers go with that program, simply because they don't always have that much cash on hand, and it's easier to pay it off more slowly than it is to kind of bring something all up front. And then the next program, which is also really cool, is the grant program. So the grant program is not like the second in that you don't have to pay the grant back. And then with the grant program, you put 2% down, or you only have to put 1% down, excuse me.
Right.
So, and the grant covers the rest.
Okay.
The federal grant and the VHDA covers that completely. So if you maybe have a little bit more money to bring to closing, that's a good way to get money and not have to pay it back. So it really just depends on the borrower's comfort level.
Can you go to closing costs as well? The grant?
With the grant? So the grant only covers either 2 or 2.5%.
Okay. Okay.
So it doesn't give you any money towards closing costs.
Okay. Okay.
It's just
for the down payment.
Down payment, correct.
Yeah.
1%. And so you only have to put 1% down, which, some people have a little more money in the bank and they want to do that because to them that makes sense. So it really just depends on each individual borrower. And I always discuss both programs with people just so that they can be knowledgeable about it and make their own informed decisions. They're pretty cool. I think it's a really great program. And actually, 40% of home buyers are first-time home buyers. And so everybody is using this now. And I think the word is getting out there a little bit more maybe because the housing market is so hot. And then, with all the talk on the government and stuff about extra grants, they're kind of looking into grants like that are right in their area. So it's a pretty exciting time.
Are there income limits to people who are eligible for those grants? Like they can't make a certain amount of money? There
are, and it's area specific, but for one borrower, it's around $72,000. So it's based off the area. Yeah, it's pretty big for this area.
That's pretty big.
It is, but also always check with your lender because they're going to be looking for those things. They're going to look at your income and they're going to look at, do you hit the guidelines or the qualifications?
Right.
And then it goes up a little bit if you have more borrowers, and there are lots of like nuances and kind of different rules that I won't get into. But But any lender that's going to do this program for you is going to be looking into those to make sure that you qualify.
Okay. Well, I mean, if you're making over $72,000 a year, I don't think you need assistance.
Exactly. Like you probably can do something else.
All right, that's good. That's good because a lot of people, are interested in these first-time homebuyers programs. That's good. When we were talking on the phone preparing, did you want to mention anything about how the buyer starts to prepare for this pre-qualification process?
Yeah, we can talk about that.
Yeah.
So when you start to get ready and you're going to talk to a lender, there are some very basic things that everybody asks for.
Uh-huh.
So we're going to ask for a non-expired government ID.
Mm-hmm.
We're going to ask for your last 30 to 60 days pay stubs. We're going to ask for your last 2 years tax returns.
Mm-hmm.
Tax returns.
Bank accounts.
W-2s.
Yeah.
Yeah, that's the bank. That's the bank statements.
Right.
The last 30 days. And W-2s.
Yeah.
So those are the basics. You know, it's LES if you're in the military. We would ask for those. And then we kind of go from there. If you're a self-employed borrower, we ask for things like 1099s, K1s. So those are a little bit more specific, and we, can go maybe into more detail on that another time. But depending on what you do, if you're W-2'd employees, it's pretty basic.
Yeah. And I had a client a little over a year ago, and it was so sad. He was pre-qualified for the house, and he had a good job. Income was good. Unfortunately, for this company he worked for, it was a carpet cleaning service, and I didn't realize how they work. They'll pay you a base salary, and when you go out, like say if someone says, "Oh, I just want my living room carpet to be clean," so it's all salesmanship. They say, "All right, we'll do the dining room and the bed," and if they make a commission off of the extra services that they bring in. So right before closing, and it was so sad because this was a young couple, first-time home buyers. They realized that when he gave in his W-2s, that even though it showed it, a good portion of it, and I guess maybe, see, if it was on the 1099, they would have seen right off the bat that it was commission, but a good portion of his salary was derived from commission. So being that he was only maybe 3 months on the job, we have to wait 2 years for him to show, because he's, in a sense, he's not really self-employed, but since his portion of his salary comes from a commission, now we have to wait 2 years.
Yeah, which is why we also ask for your pay stubs.
Yeah.
So
yeah.
when I start talking to a borrower, I ask some basic questions to every borrower, and it's are you salaried? Are you hourly? How long have you been at this position?
Right.
Do you make commission? And then I go ahead and I look at the pay stubs, because the pay stubs oftentimes break it out.
Yeah.
And then sometimes there are some extra steps that are needed in order to either use the commission or to not use the commission.
Yeah.
So it can get really complicated.
Yeah.
You just have to know what questions to ask your borrower.
Yeah.
In order to make sure that things like that don't happen.
And his credit was good, and on this base, if I got him a less expensive home, he could have got it. But that commission brought him into a higher range to be qualified for a more expensive home. But now he has to wait. We're almost at the end of the 2 years, so I'm hoping maybe next spring I could get him a house that he wants. But it's tricky, and
it is.
I don't know if you belong to any of these Facebook groups, first-time home buyers, and you see so many questions coming up. A lot of times it's with the mortgage process. It's I
know, and that's why I say don't be scared to talk to us.
Yeah,
we're just people.
Yeah.
And ultimately, we just want to help. Like,
Yeah.
that's why I got into this industry. Because I remember when I bought my house and I was terrified.
Right.
It was really scary. And I worked with a mortgage professional. This was a while ago. And he made me feel really comfortable. And I, you know, I was, you know, you can barely breathe and you're kind of like, okay. And I felt very comfortable. And, you know, sometimes I think back to that and I'm like, that's how I hope that my clients feel about me the way that I felt about him, because he just gave me the information, and it calmed me down and ultimately got me through the process. Another thing that I did want to mention, because you brought up the commission, and this is sort of not normal, but because of COVID last year, a lot of people claimed unemployment.
Right.
And we actually can't count unemployment towards income.
Yeah.
So if you do have a self-employed borrower, it's also really important to make sure that you're separating those two incomes. And that's another big question that I get all the time, because so many people went on furlough, got laid off for however long, and they want to know if they can count that income, and the answer is no.
Yeah, that's going to be you know, another way. I mean, because of COVID-19, since a lot of people were laid off when it comes to pre-qualifying them, if they go back to work, do you consider them, like, even though they made less money in 2020 from their company, do you still count it? Like, say if they made $30,000 a year, but if they got laid off and they only brought in 15, when you do to find out how they pre-qualify, will you go back by what they should have made in the last 2 years, or it's a case-by-case situation?
It's case by case. So I can tell you, for self-employed borrowers, no. We have to average it. And for everybody else, for salaried people, they don't really have to worry about it either, because it's based on what you're making now.
Right.
And then it's case by case. You know, what we look for is the ability to repay, and are you going to continue working? So, you know, if you can make a strong case for that, then chances are good for you. But I always take it person by person, because you know, there are just so many nuances with careers.
It is. You know, I've been in this business now like 27 years, and it still surprises me. And there's still situations that come up that you have to research, you know, you have to ask for advice, you know. So it's not stagnant. It's always going, you know. And people who try to go on it by themselves, you know, or specifically when it comes to listing a house, you know, it's a hard thing to do. Some people say, I just put up on the, you know, on the internet, and it's there's so much involved with it. So,
you know, I always recommend people go with agents, because what oftentimes happens if they don't is I become the middleman. And I always wind up saying, I don't do an agent's job. I'm not qualified to do that. And so I don't know the answer to that question. And oftentimes, especially in the market right now, agents are able to get their clients much more than they think they would save if they didn't use an agent. So I always recommend it. They're insured. They know what they're doing. It just makes the process a lot smoother.
Right. All right. So our last topic we want to bring up, and you know, what are the differences between FHA, Fannie Mae, and VA loans? You can start off with VA loans, because that's a certain audience.
Yeah, for sure. And VA loans are huge here. So VA loans are cool because they often have the lowest rates, and you don't have to bring any down payment down. So with the other types of loans, you have to have some kind of down payment down. But with the VA loan, you don't. What you do get into is something called a funding fee. And so say you're active military and you're buying a house for the first time, and you want to get a VA loan because that's the best option for you. So you're going to have to pay a funding fee. And there's something called mortgage insurance with the other ones that we'll get into in a minute. And basically the funding fee is mortgage insurance for VA loans. So if you're a first time buyer using the VA loan for the first time, you put 2.3% of the purchase price or the loan amount. So, which oftentimes is the purchase price because there's no down payment. So when you get the loan, it's often a little bit high. It is a little bit higher than the purchase price because that funding fee is rolled into the loan.
Right.
It's still a really good deal because you're going to pay it with your FHA and conventional. You're just going to pay it monthly instead of rolling it into your loan. And I'll get into that in a second. So that's the biggest thing with the VA loans. And then, like I said, if you qualify for a VA loan, the interest rates are oftentimes much lower. And generally, we look for the lowest credit rating of 620. So it varies here and there, but the higher your credit score, the better your rate. So I always recommend people, try to keep their credit clean all the time and when they're looking for a house. So that's the basics of the VA loan. Then I'll go into the conventional.
But before that, you're going to mention, you're going to talk about private mortgage insurance, which is not needed for a VA loan. Am I correct? Right.
Correct. Right. So now I'm going to go into conventional, which does have private mortgage insurance.
Okay.
I should have made a graph. Maybe next time I'll make everybody.
Okay.
So with conventional loans, there are also different qualifications, but let's say we're first-time home buyers. So you're going to put anywhere from 3 to 5% down, and then on top of that, you're going to have to pay what's called mortgage insurance. So if you put less than 20% down on your home that you're purchasing, what the mortgage insurance does is it basically says if you default on this loan, we're not losing all of this money. So that's basically the bank saying we also need a little protection because we're taking a really big risk because we're lending a lot of money here.
Right.
So depending on the person's credit and down payment, that will be sort of what your monthly mortgage insurance is. It's called your PMI for the conventional loans. Okay. And then, so that's the difference. VA doesn't have that. They have a funding fee. Conventional has primary mortgage insurance, PMI. And then you get to your FHA, which is a government-backed loan. And so they have actually two different kinds of mortgage insurance. They have an upfront mortgage insurance and then one that you pay every month. So the reason for that is because oftentimes people that are using FHA loans have a little bit lower credit score, which means the lower credit score you have, the higher risk you have. And so they make people pay more in insurance because the likelihood of them defaulting is higher. I'm not saying they're going to. This is just the qualifications that have been made in order to keep things running smoothly. So with FHA loans, you put 3.5% down. That's your minimum, and then you will pay a 1.75 upfront mortgage insurance. And then you'll pay, usually I just click a button and it calculates it, but I think it's like 0.85 or something like that monthly. So the mortgage insurance and the upfront mortgage insurance for FHA loans are oftentimes higher than conventional loans. So if you have a higher credit score, I usually start with a conventional and then I look at VA and just see, you know, all of the numbers and what's going to be best for the borrower. And then there are closing costs, of course, with all of those loans, and those are pretty similar. Those are pretty similar because most of the closing costs are actually not fees that we control. It's like your tax and your deed, stamps, your mortgage, you know. So it's what insurance are you paying and what are you paying to actually process the loan and process
Right.
your deed and your mortgage to make sure
Right.
that everything is correct with the city and there's nothing else going on with the house.
Mm-hmm.
So those are the basic differences.
I was following one of these Facebook groups, and they're all realtors, and there was you know, it was 3 pictures of ladies
I
in
already,
Did you see it? And
it
it
was
got me upset
yesterday. I
because
already knew you were going to say that.
it got me upset because they had the one who went for the FHA loan was in the dumpy bathing suit, and the majority of my clients go with FHA, and let's say your credit score is great. Let's say it's in the high 700s, but you may not have that much cash. You could still go with FHA, right? And put down 3.5%. So
Yeah.
there's this stigmatization on people who go FHA that their credit really stinks and they're on the bottom. No, it's not. There shouldn't be nothing like that.
You're right.
The reason why the government put together is to help middle income America buy homes, because a lot of people don't have 10% or 20% to put down for a house. Okay, takes a while to build up, but they could save up 3.5%. So if you go with FHA, that's fine. There's no qualms about that. And Fannie Mae is about 3% down, right?
Fannie Mae and Freddie Mac. So those are the 2 main ones, which are conventional.
Yeah.
Yeah, it's 3% or 5%, depending.
Yeah. Is the credit score a little bit high that you have to have for a Fannie Mae?
3% is going to be like your first time. They're called home ready or home possible loans, which I wasn't going to get into too much today. Because there are also some qualifications there, but you can put 3% there. And then otherwise, if it's not your first time buying a home, it's your second, and you're still going to use it as your primary residence, then you can put the 5% down.
Yeah.
So there's just so many little intricacies that go into it.
Yeah. It's so true. We really need to do another one because there's so many programs out there. And you can't. I like to keep the podcast around a half hour to keep people's interest. So there's so many topics that we could talk longer, but then we lose the attention of the viewers. But we got to go again and talk about these other programs out there because there's a lot of good ones out there to use. So
I would love to talk about that. I would love to talk about some things not to do when you're applying for a mortgage.
Oh yeah.
Or when you're in the middle of the process. I call it my 10 commandments.
Yeah.
So that's also a really good information for people to have.
Well, we'll do this again. I hope you enjoyed this and found it beneficial. Let me put up your contact information. All right. And here it is. And when I put in your phone number in my database, so you were, I guess, living at one time in Colorado.
I'm from Colorado.
Okay.
And that's why I put my hand over my heart. That's my one piece of home that I refuse to let go of. So I am local to Virginia Beach now, but my 970 I hold on to pretty tightly.
Well, my wife kept her New York cell phone number. It's 917. And she said, everybody knows that that's part of me. You see, when this is begin showing, I mean, we bought our house 21 years ago down here. 21 years ago, if you called outside your area code, a lot of times those phone calls would get lost and they would have to go from one. I don't understand the whole science to it, but it was very complicated back then. Now, you could call anything, any phone across the nation, and it goes there quickly. I don't think there's any extra charges anymore. So I got an account down here, like going back down to 2001, with a cell phone that I've had since 2001. And but because of that situation, I don't want people to have difficulty finding me. So I kept it, but my wife kept it, and it works fine. And don't think, well, people don't think like that anyway. That everything, that if I'm calling 97, I want a Virginia mortgage broker. No, we're all, one big, we're in the state, and you're not calling someone out in Colorado,
Exactly. I
Right,
usually will call people and then I'll send them a text so they know who I am. Like, let them know. But it hasn't hindered me so far. So
Yeah. Nowadays it doesn't. Like I said, going back 20 years ago, it would have made a difference. But now it's fine. So there's your contact information. This is going to be saved. It'll be on my blog for people to review. I repeat it again Saturday morning at 10. So it'll be, a lot of the good stuff. So I want to thank you.
Thank you for having me. I enjoyed this a lot.
And we'll do, we met via Facebook. We'll do business together. And I'm looking forward to a very good spring, summer, fall, and winter, where a lot of people see, the real estate market is really hot in the spring and in the summer. But because of COVID, and a lot of people held back from putting their homes on the market, I think there will be more homes going on the market in the next few months, as long as we stay, on the right path and get rid of this COVID-19. And it should be a very good year towards the end, not slowing down as we get to the holidays. I think it's going to be a great year for real estate.
Yeah, I agree. I don't see any signs of it slowing down. So I'm excited for what's coming.
Yeah. All right. Well, thank you very much.
Yes, thank you.
Enjoy the rest of your weekend. And in a couple of weeks, we'll probably do this again. We'll talk about some other programs, okay?
Yeah, absolutely. I'm around.
Right. Okay. Thanks so much.
Bye.
Okay, bye. All right. That was really a good conversation. I really enjoyed that. Each week, I preview another video about what's going on with the market. And since we talked about today's market and how competitive it is, here's a little video for a reminder of that. All right. And I hear from my producer. Now, Rachel's going to see how sugar I am. But we have a special guest in the audience. Linda, you said there's a special guest in the audience?
Chris, great news. We have a special guest in the audience. He was a Spanish puppeteer known for his speed, skill, and grace as a ventriloquist. His stable of characters included Johnny, a childlike face drawn on his hand, placed atop an otherwise headless doll, with whom the ventriloquist conversed while switching voices between Johnny's falsetto and his own voice with great speed. Seen many times on Ed Sullivan, ladies and gentlemen, Senor Wences.
Well, I haven't seen him since the Ed Sullivan show. It was great seeing him again. And have a wonderful week. It's going to be great weather. Still, if you haven't been vaccinated, wear your mask and still wash your hands. Try to be, if the store is really crowded and you don't have to wear masks. Try to keep a little social distance, all right? And be kind to each other, all right? I always say the greatest power we have is love, and the greatest gift is each other, okay? So we'll see you next week. Where's my